Trying to make some Brando bucks. Hey, come on now. I rock the hoodie. You know what I'm saying? You got to believe it. You got to speak it. You got to manifest it, and it'll happen. You know? Hey, what's going on? What's going on? Beast Mode Brandon back again. It's been what 7 days since I got to be blessed with you guys on an evening call. He says trying to make some Brando bucks, just like I said. You got to claim it. You got to speak it. You got to want it. And hey, in the end, you got the faith for yourself to make the trades and rock and roll. You know, so I mean, with anything, what we do is very powerful, but without that consistency, that risk management, or the trust within yourself, none of it's really going to matter. So that's why we really like you coming in and paper trading just to instill the confidence, whatever technique you want in, whether you do the weekly income plays, whether you do the iron condors, or even on the day trading side. No matter what you do, you just got to remember those three things. So that's really what you can get out of this call before we go over the report aspect. Um, but yeah, and until I realized that, like I said back in 2016 when I started, I did not break out until that happened right there. So I was like, man, you know what I mean? But anyway, let's rock and roll. Let me share my screen. And I guess we'll get the summary rolling right now. All right, let's go. Where to share at? All right, we should have it right now. What do you guys see? The coloring book, right? Y'all see the coloring book? You see my Thinkorswim charts or what? Make sure I'm on the right screen. All right, yes, perfect, perfect. All right, so first things first, to get the report this month, if you are new or you don't understand what I'm talking about, every single month I say the dream team comes together and we all put pieces in the report. It is covered for crypto, stocks, options, shares, just and like a trading plan, give or take, right? So when you use that in conjunction with your everyday trading plan, it increases your odds over the long haul. And in the end, what more as a trader, right? Do you want, right? We trade, we're doctors. We want to take high probability, high precision trades, right? You a doctor, you cut in high precision areas and stuff like that. It's all in alignment. So each month I go back and test 20, 30 years. And I look for certain patterns, right? And within those patterns, I can see if something previously played out and that gives us more of an advantage, but then we just don't take the trade. We still got to come in and get a reversal arrow or something. And this is definitely geared towards the swing traders. If you ask my account which one's better, it's going to say swing trading because there's opportunities to make 3-digit, 4-digit returns. It's very, very consistent. It's not as what I'm going to say precise as in day trading. It's a little bit more executing on a time right here, right now. And if you miss it, say by 30 seconds or a minute, that could be the difference of you getting a winning trade or not, right? So the report is geared towards the swing traders and investors, and you can't go wrong with it. Anyway, where you get it, level 3 right here. If you don't have it, just let me know. I can shoot you over a copy of it. But you come here to the alerts and go to Mastermind Stocks or Options, and you can see the link right here. It is dropped, and this is the report for November. What's nice about this is we actually dropped this out November 1st. Unfortunately, I didn't want to take any positions before the election. We should have. We'd probably be out with 8 winning trades right now, but we can still get ready. You know what I mean? So you click on this, and it's going to bring you out. So go to the Discord. That's where you're going to get this. Once you download it, this is what you're going to see right here. You see my emails. This is what you're going to see right here, right? And you scroll down, and like I said, there's a whole bunch of stuff that you could watch, but we're going to fast forward and jump down here. There's what 30 or 29 pages in this right here. November. There's certain days right here. Bulls. It is typically bullish for the stock market. When you got the trending up Bitcoin right there, that is historically bullish for Bitcoin and crypto stocks. So just knowing that, right? Would you want to take a buy opportunity, right? Right here on Saturday or Sunday, right? When you've already had 1, 2, 3, like 4 bullish days. Me, I'm looking to enter on the bearish days, on the dips, and I want to sell out into these bullish ideas. And that's kind of how I manage and navigate the report in the same thing. So if you're ever unsure about what this stuff means, you can see it right here. You see all that. There's definitely news and stuff you can read. Scroll down. There's Bitcoin. All right, let me scroll back up. There's Bitcoin days that are higher probability than others. All right, so this is where I like to go right here. The Oracle Mastermind forecast, right? Everybody see my screen? Everybody can see this. Correct? Put a one in the box right now. Make sure you guys all see this on the right chart. All right, perfect. Just making sure. Someone said they can't see nothing, and I was like, wait a second, it's sharing, it's recording. So, all right. So inside of this, right? How do we navigate this? Yeah, that's right. How do we navigate this, right? So the first biggest part that I like to do each month is I like to come in here and I like to say, well, what do I have right here? Well, I got the bullish predictable days. That means those days we're expecting to see some upside movement. And on the other flip script, we have bearish predictable days. We expect to see some kind of downward pressure movement, might trade sideways, or it might sell off, right? So knowing that, I know that this month you got the 4 through the 6th and you got the 12 through the 15th. The 12 through the 15th is actually next week. And if you remember Mr. Wilson in the Discord, he said, I'm waiting for next week to get that bearish cycle. More than likely, we're going to trade sideways or retrace a little bit, especially with the positive news that came out with the election. Like the market ripped. The Dow was up 12 or 1,300 points. It typically takes like 2-3 weeks for it to do that, and it did it in one day. So predominantly we're in an uptrend, but along the way we get the resets, right? And how does that play into it? Well, you're going to find out right here in about a minute or two. So I want to know where these bearish predictable days are. In a perfect world, what I'm looking to do, right? I'm looking to enter my trades on the first, second, third trading day of the new year. And if you miss that, I come down here and I enter my trade on the bearish. So the next opportunity will be the 12th through the 15th. So we can come down here and we could see in the stock market, you have bearish days right here. Down here, a couple more days, you got bearish days. So next week, I'll be looking to take these trades. And that's why I wanted to do this call tonight so that we can prep for the next wave that we are expecting. Does it have to happen? Absolutely not. But probability and likelihood is very positive. So the reason I'm showing you this, so I don't have to scroll back right here. When we trade, right, I have an 85% probability over 4 years on the swing trade side with one section, and I have a not over 92% probability on another section of the report over 4 years. So I'm very good at what I do, but in the end, I mean, it's more fun when we all do it together. You know what I'm saying? I do eat crayons, so I'm not telling you what to do. Remember that. Anyway, what I do is I take a position, and if I would take it, say, today or tomorrow, and my trade would go down, I would look to take another position, right? A cost average between the 12th through the 15th, because the probability says we're going to see some kind of downward pressure on those days. All right? Does everybody follow me? If I'm looking to take shorts, I'm looking to take shorts through the bullish days. So if I'm looking something for a put, I want to enter on the bullish predictable days because, like Warren Buffett said, there's no better opportunity than to get something on sale if you have a bias towards that. All right. So I'm going to scroll down here. We're going to dive right into the report in my section. And when I say I'm looking for a bearish predictable day, I just shown you what I'm looking at. So everybody's following me still right now, and you completely understand that? Put a 2 in the box right now. Put a 2 in the box, just so I don't got to go back up top and show you exactly what I'm talking about. Is everybody following me right now? All right. I see some 2s. All right, let's keep scrolling down here. All right, right here, page 25. You see the beast mode trading plays, right? We're going to look at this top part right here. Or during this part right here, we have a couple rules that we like, right? A couple rules. Third Friday expiration, right? Third Friday expiration of following month, right? So that's one rule. Second rule is our option criteria. What's our option criteria? Option I'm gonna say criteria. What's our option criteria? We want the bid and ask to be a 20% spread or less. You take the bid divided by the ask. If you're unsure, that's how you find it. We want our delta to be 19 or 20 cents or higher. And we want the open interest to be 100 or more. So that's our option criteria, right? Another rule we have, give yourself an opportunity to buy that trade 3 times. The first time, that counts as one entry, right? Remember, on those bearish predictable days we just talked about, if I take a trade on Amazon today and it goes against me 20% or 30%, I'll buy that same position next week for the second time. So if I have $500 to put into the trade, my initial trade shouldn't be $500. It should be $250 because you want to spend up to $500 to give yourself that added ammo, right? You want to spend $250. And if you're down 20 or 30%, your $250 is probably worth about $150, right? So then you put in another $150. So it brings your average from 250 and 150. It brings your average to 200. So now you only need 1, 2, or 3 good days in your favor. And guess what? Winner, winner, chicken dinner. You get to close out and you happy. That's what gives us that 85% on the swing trade, month in and month out on this side, right? 3 times. The last thing, well, Brandon, you always talk about risk management. You are correct. I do have a stop loss. It is not pinged or pegged to a specific number. It's pegged to time. So my stop loss, I'm going to put SL stop loss is last day. Last day of the month. I'm going to put day of month, right? So, third Friday of the following month, so this is November, we're going to take the third Friday of December, right? And we do this why? If we take the trade and it takes all month to play out in our favor, well, guess what? We're not going to take 100% loss. We're ideally or very high probability, we're probably going to take a 50% loss. We may take a 20 or 30% loss, right? But we give ourselves the time to allow these trades to manifest in our favor. And that's what gives us that 85+% probability. How many plays do you recommend we take at one time? That's really based off your account size, Hillary. If you have a $5,000 account, right? I mean, you could take all these trades and you're going to start off with one contract anyway. So you might only be in $1,200, $1,300 between these ones that are on the report for this month, right? So my stop loss, if Amazon falls and I enter it 2 weeks from now on a bearish predictable day, and then it falls again, I'm still hanging out. I'm okay because I'm using proper risk management, right? But if it's not profitable, if I'm not in profits on the last trading day of the month, which is November 29th, that is my cutoff day. At November 29th, if I'm still holding any position from this section of the report, I'm cutting it. And that's my stop loss. And that's right there is the rules for this top section of the report. Is everybody follow me right now? Put a DCG in the box right now if everyone follows me, and then I can erase this. If everybody
Okay, you said
go ahead.
you said the third Friday of the next month. That's the main thing, right?
Yeah, our expiration is the third Friday of next month, and I'm actually going to next part. I'm going to pick contracts and strikes out for you to take, so you don't got to do any of the hard work. I just want you to be aware of the rule. But the most important part is that if we're not in profits before the last trading day of the month, you have to close out your position. Are you following me?
Yes.
And that's how easy it is. And you don't even got to watch these trades all the time. You can put in that trail stop limit that we teach. And I'd say 9 out of 10 times, at 8 out of 10 times, it's when it stop you out of a trade, and you ain't even going to be on the phone or the charts or nothing like that. And that's why we utilize it. So it's the next best thing to have automation on your side. I call it the semi-automated setup. You know what I'm saying? It's either going to stop you out for a win with the trail stop limit, or you're going to manually close the position at the last trading day of the month. Doesn't really get much easier than that. You know what I'm saying? Ivan, you got a question?
Yes, Brandon, I know one of the first things you said is, I think it's a difference between the bid and the ask has to be 0.2 or lower? Is that
20%.
20% or lower?
Yep.
And do we have to do the math on that, or we can see that on the charts when we go look at the options chart?
It's in the options chain.
Okay, so we can see that number without needing to
Yeah,
actually
yep,
calculate it. Okay, great. Thank you.
Yep. Absolutely.
Does it show up on the mid MID? Is
Yeah,
that where you seeing it?
we're going to go over this right after this, but you're just going to take the bid and divide it by the ask.
Okay, I'm sorry.
Yeah,
All
now
right.
you good. You good. We're going to walk over it together too. So I want you to be able to do it for yourself, but we're going to walk over it together and get the option strikes right after this.
Okay, thank you.
Yeah, not a problem. Ivan, you got something? I saw you come off mute and then come off again. Go ahead.
Yeah, no, I was having technical difficulties over here. I'm
Oh,
good.
you good, bro? You good? I don't hear no music, so must not be too technical. I'm just playing with you, bro.
You're good.
Nice seeing you again. All right, so I'm gonna erase all this. Next phase. All right, so this right here, top parts. We're gonna walk through this together, and that's really the purpose of this call for this top section right here. You can see the calls right here is Amazon, PayX, Home Depot, and we got Triple M. So what do? Let's come right here to the option trade or option chain itself. Trade number one is Amazon, right? We're gonna walk through this together. What's our rules? Third Friday of the following month. So when I take in no contracts in November, you see December 6th is the first contract of this month. So 1, 2, 3. It is typically around 45 days when we take the trade. There's 43 days of expiration right there. So we're going to click on December 20th expiration, and we're going to look right here. So when you guys asked about the bid and ask and all that, all you're simply doing is all the trades I'd pick in here, they're already liquid enough, so you don't have to worry about it, right? But just so you're going through the process yourself, if you say I want to take this trade right here, well, the bid is 500, the ask is 550. 500 divided by 550, we know is less than 20% because a $50 spread isn't really nothing, right? It's about 10%, if that. When you come to something crazy like this, BKNG, and you're taking a position, right? Let's just look at it real quick here. You're taking a position. The reason I say that is because if you look at something like this right here, if you take your bid and your ask, that's like 60 or 70%. If you market order into this trade, you're going to pay $2,200 one contract. And if Andre says, yo, B, we're going to go get some steaks after this, sell out, I'll be there in 30 seconds. I say, all right. If I market order and sell out of my position, my $2,200 becomes $1,000. That's not a good position to be in. I don't even want to put you in that position. So that's the rules right there. I mean, there's nothing like, I mean, you don't got to take too much into it. It's real quick. You know what I'm saying? It's real quick just for you to walk through that. But all right, so back here to Amazon. Trade number one. Amazon, third Friday of the next month, which is right here, 43 days, and we walk through. The reason we have these rules, right? If we go to our open interest, that's thousands and tens of thousands. Once again, it's liquid enough. You don't have to worry about that. We just need 100 or more. And the reason my delta rule is 19 cents or higher, give or take, we're going to say right here, is because of this. The farther out of the money you go, the cheaper the contract gets, but the probability of you to get a winning trade drops drastically. We don't even want those odds. If I'm not willing to put my money into it, I don't want you to put your money into it. You know what I'm saying? Like, we a huge family, right? So the reason we do this is because Andre might have a $100,000 account. So you could take this trade right here and put $1,000 in one trade for one contract, and he's only in 1% of his account. We have Abra, who might have a $50,000 account, so that she might want to take this trade where she's risking $350. And then you got Eagle Eye, who might have a $2,000 account, so he's going to want to get something. He's going to want to get the cheapest contract. It's $220 for that one. So the reason we do this is because everybody is going to risk a different dollar amount per their account size. So if you have a smaller account, you're really going to use the delta and go down until about 19 or 20 cents or higher. Everybody following me? Put a 1 in the box. Everybody follow me. Put a 1 in the box. So I see a 1 in the box. There we go. I see some. So this month, right, to make it affordable for all, I'm going to get loaded up right here, right? And I'm going to say Amazon, AMZN. We're going to put 12/20, right? 12/20. That's December 20th expiration. And we're going to take the trades. These are acceptable. $221 for one contract and $355. So we're going to look at the 220 and 225 calls. 220, 225 calls. And that way we walk through it together. Now, I'm not going to go this slow on all of them, but the next one we have, right? Where's it at? All right, here we go. Next one we have PayX and Home Depot. Same exact process we just walked through. PayX, December 20th contract. Now look here. You can take either of these contracts, right? Our delta is 19 cents and higher. It's 24 and 41. Everyone can afford $160 for one trade. And everyone might not be able to afford a $330 account if they're starting off with a small account. So that I'm going to say you could take the 150 or 155 calls, right? So we're going to say PayX, 12/20. We said 150, 155 calls. All right, next one. Moving right down the list. Home Depot and McDonald's, right? Home Depot, same contract, 3 months of, or 3 months through, or a third week of the next month expiration. See, here's a perfect example why we use the Delta rule, right? Everyone can't put $1,400 in account for the 400 calls. I might buy that one, but you might not want to trade that because it's a little expensive. So if you come down here and make it affordable, you could really take either of these contracts, and that puts you at the 430 or 435. You're risking 300 and 380 a contract. See how it becomes a lot more affordable than putting $1,400 into one contract. So that's why it's hard to really say what I get filled for. I can tell you what I get filled for, but I may take a different contract than you. Or if I'm out of the trade, I'm going to be up a larger dollar amount because I'm putting more money into the trade. So a lot of people say, how are you up $1.50 or $150 on that one trade, but I'm only up $15 when you risked $60, but I risked $1,500, where you might be up 20 to 25% ROI technically. I may be up 10 or 15%, but the dollar amount might be higher for me. You get what I'm saying? So you always have to remember that. But you have to use and utilize your account size if you want to be in this for the long haul. Trust me. I struggled with this for my first 3 years, 8 years ago. I say all that because my loss is your gain. So we got Home Depot, right? 12/20 expiration. We're going to get loaded up. You can watch the 430, 430, 435 calls. Right? Next one we have McDonald's. And we go through the same exact process. MCD. Third Friday next month. Scroll down here. Everything's very liquid. Right here. So this will tighten up tomorrow. But if this did not tighten up, what's the bid and ask? That's 50%. So you probably want to go up here where the bid and ask is 5% or 10%. You get what I'm saying? But it'll tighten up tomorrow. It's never like that. It's because the market's closed. But anyway, 19 cents right here. That is it'll probably be about probably like a $200 contract. So we could do the 305s or the 310 calls. 305, 310 calls. And the last call side of the report on this side is Triple M. And then we have EA puts. All right. Triple M. Third Friday of the following month, our Delta rule right here, 160, 350. So those two strikes, we're going to watch for Triple M. Triple M, 12/20. We get loaded up to 135, 140 calls. Now, the same thing that we do the calls. I always like to have a put trade. Well, EA, same thing. Third Friday, nothing changes. Now we come over to the put side, and we say Delta right here, 29, and 46. So we're going to get these two contracts loaded up right here. Open interest is plenty. There's hundreds of that. That's fine. That'll actually increase. So we're going to say EA 1220. And these ones, right? You want to enter on a very bullish day. Why not get it on sale? You know what I'm saying? When we expect this to push down this month over the next 2-3 weeks. But this one, we're going to get loaded up to, what we say, 155, 160 puts. I'll put a P on that one. All right. Next section of the report. We went over the top part. Next section we have OTC plays. If you do not have extra money, do not take these trades. I call these the lottery ticket trades. Why? You come over here and you look at this, and we zoom out and you look at TGGI, right? What happens is you're going to see something. I'm just going to put on the weekly time frame, so you can see a broader scope of it. What you see happens is you get hammered, we buy it, pushes up. Gets hammered, you buy it, it pushes up. Gets hammered, we buy it, it pushes up. It gets hammered, we buy it, it pushes up. Where's that right now? What happens for these crappy little stocks, companies? I shouldn't say crappy. What happens to these low risk probability companies is they continue to go down, and then when they have like some kind of news event come up, then it'll give you a pop. You sell out, walk away, and you come back and do it again. If we go back into the last year and you look at it more frequently, like, dude, you can get these trades where you get filled down here, and that's 100% right there in one day. Once again, trade comes down, you buy it there. There's almost another 100% right there. It comes down, you might buy it here, you might buy it here, averaged out, pops up. We're probably going to get a pop up pretty soon because we haven't popped up for a while. The reason these are risky because these are OTCs, over-the-counter companies. They can go to zero or get delisted, and in that case, you're going to lose all your money. So I think the probability is like half of these companies end up going worthless or to nothing. So just know that is a possibility. So only use money that you're willing to lose, but it's like a high risk, high reward. Everybody follow me? So one of the stocks that I really do like, BRLL. It's at triple threes, and it hit a high up here of double twos. That right there is almost a 10x move. That's you putting $100 in and potentially being $800 to $1,000. That's an okay probability. Like, it could happen. Realistically, you can get down here at 0015, go up here. That right there is like a 400% gain. You know what I mean? So it's pretty common to get 100-200% trades, but the thing is like, it may take weeks or months. You get what I'm saying? So to me, it only do it if you got extra money. Now, for some of you new folks in here, or a first time on the call, you hear me say a motto, right? I day trade for my job. I swing trade to help grow my account. And then I pay my bills with both of them combined. And I use the remaining profits to invest into retirement shares. Why? This is a good little story right here. I had a client in 2019, and I told him to pick 2 stocks and just buy shares every paycheck, every 2 weeks. One of his stocks was Tesla. He researched it. Brandon Elon Musk is this. Tesla's going to be this. And I'm just like, man, I'm just not buying it, bro. I like Apple for the best bet. The iPhones and all that's going to be here. Well, he had about 12 or 13 grand in the Tesla come 2020. Well, Tesla ended up 3xing or 4xing his money. So his 12 grand was 50 grand. Then it split, and his 50 grand went up to 3 or 4x again. His 50 grand went to $200,000. Then it split again, like a 5 to 1, or one of them went 5 to 1 and 3 to 1 or something like that. And then his 200 grand went like 100% or something like that. And at one point he was up 400 and some $1,000 off a $12,000 bet, or I should say an investment. That doesn't always happen, but the opportunities are there for you to be in there, right? Me, I'm a little bit more safer. I bought into Apple. I'm in SPY at 394. It's what, almost 600 right now. I'm in Apple, I think at like 112. It's at like 220 right now. I'm in Amazon from 124 to 210. So I get my share of good plays, but I prefer the little safer route. But I mean, in the end, you can't really go wrong with investing. So what I do is I take Warren Buffett's logic and I like to buy when stocks are on the decline or they're red. So if you look at Triple M at the beginning of the month was down here underneath the alligator, 128, 124 to 131, right? If you look at good companies and they get underneath the alligator, what happens over the course of the next 2-3 months? Price pushes up. We get underneath the alligator, price pushes up. We get underneath the alligator, we're already back up. We're probably going to take these highs out, and we're probably going to push back to the upside at some point and break those highs out. So for me, I have Triple M in here, right? Ethereum. Don't tell everybody this though. Me, I buy Ethereum in shares at $24. I'd rather buy one share at $24 than buy Ethereum at $2,400. You can buy a lot more, and in the same, it's all but identical. Don't get me wrong. I like the simplicity, right? Don't shoot the messenger. I like the simplicity of having everything in one account or one area and being able to spend it without having to transfer this and that in the gas fees aspect. However, do I think it's wise to trade DeFi and some of the meme coins? Absolutely. But it's definitely more aggressive, I would say, and I would never put thousands and thousands of dollars into a company. I would diversify it with a couple of them, but I can't say I wouldn't because I do. But in the end, I know it's more riskier, but the reward is a lot greater. You get what I'm saying? When I invest for these, I look at it like real estate, where I want to be confident that it's going to be here, be around for my lifetime, right? Unless something crazy happens. That's the kind of investments I like. Anyway, Ethereum. Could have bought Ethereum down here at $20, $25 a coin, or I should say a share. It went up to 36. Could have bought it over here at 20. It went up to 35. Could have bought it down here at 20. It's at 24 right now. And you know, Ethereum, if we break all-time highs, which we do expect in the next, year or 2 years, that means it's taking out $35. So there's huge opportunities to make 50, 60, 70% of your money. So if you can't afford one Ethereum, you can buy a couple shares right now and still get the ROI while you grow your account into a big boy. Claim it with me. I will grow my account, and I am a big boy. For the girls, I'm a big girl. You get what I'm saying? You guys got to speak it and claim it, and it's yours. I got a message today. Someone bought Bitcoin, GBTC, in the share side, right? We had it over here where they had it at $48, $47. They said, I'm up 28 or 29% on my small retirement account. I'm selling out. Thank you, Beast Mode. I'm gonna buy some more down the road or wait for a reset. Guess what I'm saying? If you're scared that it doesn't give you a reset, go ahead and buy a little position right now so you're still in. Then if it comes down and does reset, right, that's when you put your normal position size in. So what I like to do is I always like to be in them too. If I take a trade and I buy in here at 50 and it goes up to 100, I'm going to sell it half and let the other 50 or profit ride so I have my initial investment back. Then when it goes back on sale, I'm buying a piece. Goes back on sale, I'm buying a piece. Now I got two normal impulses plus my house money. So then we get way back up here. Now I'm up 2.5 times what I would have been on my initial investment using the profits that I've made of selling out of other stocks. Everybody follow me. So retirement. These stocks right here, you can't go wrong buying these in your account. If you like the money quicker, we typically see these expand up over the next 2 to 3 months or sooner, 4 or 5, 10, 20, 25% ROI. But for me, these are a little bit longer term holds, and a lot of them do pay a dividend. So I'm holding them. That brings me to the last part of our report. If I told you one thing to follow, it'll be this section of the report right here, right? This year, I've lost one trade on the leap trades. If you want something high probability, super safe, the leap trades are for you. The same rules apply for leap trades as the upper part plays. The only difference is you're buying 9 months of expiration, 6 to 9 months of expiration time or more. The other difference is when you take a leap, say you take Amazon, you buy it this month, and it never pushes up in your favor. Next month, on a bearish predictable day, I'll buy another stab in Amazon, the cost average it down, and if it never plays out, the third month I'll do the same exact thing, and on the last trading day of the third month, I will then sell out. If you trade that way right there with me, you would have only lost one trade this whole year. That was Beto, and we lost about 55%. Last year, 100% win rate. Is that something that you could add to your account? Put a 1 in the box real quick if you could add this to your account. Are those some good numbers that you'd want to add to your account? Exactly right. So that's how you trade them right here, right? We go walk through the same process. Amazon for the leaps. I'm gonna put all these in the Discord and the chats so you guys have them as well. I can also put the summary as well. Amazon. All right, so what do we say for the leaps? Well, if you want to go cheaper, right? What is 30 days on average times 6? Well, we know it's about 180 days. So if you come down here, you see 180 days, we could buy these out till April. That gives us enough months, 3 months for this to expand in our favor. Now, the reason we created this Delta rule is because not everybody has $1,500 to take this leap trade. So you simply come down here to your 19 or 20 cents. You could buy one leap trade on Amazon for $370. If you are serious about trading and you want to take a very, 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 very high probability setup, that'll be this one right here with that $375. If you are scared that you are going to lose it, just know the worst case scenario you're going to lose is $375. But buying 6 months of time or more and you sell out the third month, I want to say you can't be. I can't say can't. It's very unlikely you're going to lose 100%. You might be down 50, 60%, not 100%. Now, the retrain your thinking, right? How many of yous went to dinner and paid for a dinner and spent $500 or less? More than $100, but less than $500. Put a 2 in the box. Let me see something real quick. You spend a dinner at any time of your life that was higher than $100. And I mean, it could be more than that. I mean, my most expensive dinner, I see tons of 2s. My biggest dinner I ever paid for was, I think it was $3,600. And now since we ate at like a 5-star steakhouse, and it was crazy. But we had fun, you know? Now, everyone put 2s. Now hear me out. When you go out to dinner, do you even think 1 second that you just bought dinner and you're never seeing that money again? No, you don't ever think that. You buy something that you want. So with that, you got to look at the trade the same exact way as when you go to dinner. You don't think anything of it because it's going to mess with your mind. Don't be over there biting your fingers. Worst case scenario that's going to happen is you're going to lose the trade. When you go out to dinner, you don't think anything of it. You know what I'm saying? You get an hour, 2 hour full stomach, and then you back again hungry again. You know what I'm saying? So be confident. Follow the plan. All right. Amazon. We could take the 250s or the 255s. We're just going to say Amazon. These expirations are 4/17. And we said 255 calls. Next one. We got PayX. All right. PayX is on the list. Same thing. This one doesn't have it, so we're gonna have to go with June. And same thing. What's our delta? That's $215. I like this one where it's like $300, $320. So I'm gonna say 165. Right? So we're gonna say PayX. PayX. What's the date? It is June 20th, 6/20. What do we say? 165 calls.
Can you tell us what the criteria is on the Delta again? I missed that.
19 or higher. 19 or higher.
Okay, thank you.
Yep. Good question. Last one we got JPM. I know a lot of people that already took JPM in the Discord. They called it early. They took JPM and they made good money. I'm gonna like it April as well. So we're gonna say JPM for 417, and let's see what it is right here. 236, 19-cent delta. I mean, you can go 15 or 19. They're $250 or $410. That's how easy it is, or that's how affordable it is. 270 calls, right? And when you take the trade, you can just put your trail stop limit in the same exact way, and it'll get you out of the trade, right? I'm going to copy this, and I'm going to post this in the chat. You can copy this, take a picture of it if you want as well. I'll also put this in the Discord. All right, if you guys got, right, if you guys are comfortable now trading the report, you got value from it, you ready to have some fun this month, give me a BMT in the box real quick. Just make sure that I've done what I needed to do to prep you to have a good game plan, an idea, so we all can have fun and make some money with it. All right, I see some BMTs in the box. Awesome, awesome. Hey, let's get it. They coming in still. We good. I appreciate you guys. All right, now, I'm gonna open up for questions. Who has questions? Anybody have any questions? Now's the time to come on and ask anything that you need to get answered. Anybody? Anybody or no? Going once, going twice. Come on.
Okay, so the delta has to be 19 or higher. What about the other Greeks?
The open interest needs to be 100 or more.
Okay, so the other stuff like theta and all of that, does that matter?
Nah. I mean, it does, but to keep it simplified, I mean, the three rules that I told you, the delta, open interest, and the bid and ask, that's really what you need. You know what I mean?
Okay, no, I heard you. I'm glad because sometimes that's the problem what I had before I started with you guys. There's so many scenarios. By the time you get done trying to look through 15 things, you almost just be wanting to forget it. So I like that you got a shorter version. Thank you.
Absolutely. We just want to simplify it, you know?
Yeah, I do appreciate it. I
Yeah, I
love
appreciate
hearing your Zooms.
Awesome. I appreciate you. You a rock star. Don't forget that. Gotcha. Yolanda says ATM strategy for futures. Hey, message me or let me know. I got a Notion that has all of our PDFs and my training content. If you want to watch that video where I walk you through the ATM strategy on futures, all that is inside the document. I'm gonna put a link in the Discord, and you just give me your email or you request access. I'll give you access to it. So it's like my version of the trade school, except it's more advanced. You get what I'm saying? So we got the trade school, the fast track with Mike, and then you got the some of the advanced techniques that we use on my side. So Yolanda, you can be the first one. I got you. Just shoot me a messenger. I'll put it in Discord or the Facebook. I'll put it on Facebook. Or I'll put it all over. So everybody can have it. You can go back and watch anything you want, and then we rolling. Coach, can you go through the Condor setup with an entry? I sent you one earlier, but I put mixed up. Also, is the entry based off the close of the daily candle? All right, so when you take an iron condor, right? Well, let's just go to SPY. What you could do, right? You can come down here, and what you do is you first come over to the spread, and we got a master class on this as well, which you guys all have. You come right down here to Iron Condor, right? So when you take it, you're going to see 4 different numbers. When you buy or when you sell an Iron Condor, you're buying a call and selling a call for one bracket or one leg, and you're buying a put and selling a put for a second bracket, right? So when you take an Iron Condor, let's just say, where's price? $5.95. Let's just say we're going to go to, we'll just click this. So when you take this, you have to remember. You see how the calls are bunched together and the puts are bunched together? When you're taking a call, right? You got to look at it like this. When you're taking a call, you got two orders up here, and when you're doing the put, you got two orders. Well, up here are the calls, down here are the puts, and the share price is right here. When you, and this will help you, Nikki, when you do the top side of the leg, you are buying the outside, the top of the call, and you are selling the call underneath where you're buying it, right? So this will be your outside leg. That's your inside leg. This is the current share price where it's at right now. On the put side, you are buying the put and you're selling that put. So remember, on the call side, if our buying the call side is on the outside, we want to buy the put and make that on the outside as well. So when you did it earlier, you mix it up. So you had your sell underneath the buy on the put side. So just remember, you're buying the call and selling the call, right? They need to be on the outside. So with theory, right, now let's come here to the chart. So if we see right here, you see on this side over here, you see the pluses and the minuses, right? First and foremost, you want to change this down to 1, right? Second off, if we're doing this and the share price is $5.95 and we want to do the 600 call, you see where it says plus? Underneath it, it says minus. That's the one we're selling. If we are buying a 600 call, you can't sell. You can, but not the way that we do it. You can't sell it because you need to put this. You need to put it at underneath the 600. So the next strike underneath 600 will be $5.99. So see when you click this, it now turns red because you are now selling the contract to collect the premium. So when you come here to the put side, where you mixed up, right? You did this right here. So if you're buying the $5.99 call, first off, you can. I guess, well, you can, but if it's $5.99 and the share price is $5.95, you're going to lose this. You're going to take this and we're going to put this at we'll just say $5.91. If this is at $5.91, this one can't be $5.90. Like, you can't do that. You can, but that increases your net profitability. So if you're buying the 500 or you have the $5.91 call, you need to sell the $5.92 put. So now you're inside. So now if we click on this order and we click confirm and send, that means we're going to max loss is 74, max profit is 26. So if you take this order right here, you are collecting $26 of net profit potential if it expires worthless. And the only way it expires worthless, if it closes inside of your legs, of your brackets. So you remember your call brackets there, your put brackets are there. There's you're selling the put, there's your buying the put. Here you're buying the call, you're selling the call. As long as the share price closes inside of this, this is all your max profit. Now, if it closes inside of this, it's going to be partial, right? Partial profit. I don't know why I put an M. It'll be partial profit, PP, right? And if it closes between this, it'll be PP, partial profits. The only way you take a max loss of that $74, if it closes anywhere here. This is your max loss. Down here will be your max loss. So just remember, in simplicity terms, when you take an iron condor, your top side of the leg is buying the call, and your bottom side, the outer side, needs to be buying the put. Your selling calls and selling puts are inside of that. Does that make sense, Nikki? Oh, I see. Thank you. That's a high probability one right there since the loss is bigger. It makes sense. Yeah, that's a very high probability. That is a very big high probability. So both cells are inside the set of the 4 and the buys. Absolutely, Gretchen. And that's where a lot of people are messing up. Hey, the outside's got to be the buys and the inside's got to be the sells. You have to close these out at the end of the day before 4 p.m. Yolanda, if you're doing some of the cash settled ones, nope, you just let it expire worthless. It does everything for you. If you buy share companies like SPY, Amazon, Apple, if you can close them out, and I highly recommend closing them out like right before they expire. But if you let it go far out of the money, for a max loss, you may get a margin call and they may require you to buy 100 shares. So like I had someone, right, take the wrong brackets on an iron condor and it won and this was probably like a year ago, right? And they didn't close it out and they had like a $10,000 account or $8,000 account. And so like I'm a visual guy, so let me show you. So this is their top leg, this is their bottom leg. We took it right here. Well, at the end of their expiration, the share price closed way down there at expiration. So when you take cash settle one like SPX, you can only have a max loss. But there's a potential if you trade shares, right? You can get a margin call. So what had to happen is if they wanted to keep the position open and collect the shares, they didn't have enough in their account and they needed to deposit $23,000, and they didn't have that to cover it. So essentially, they would lose all their position unless they closed their position out for a small little loss before getting that margin call. You follow me? So to keep things simplified, Yolanda, if you trade the diamond 1, 2s, and 3s, you can just let them expire worthless. You get a max profit, max loss. That's it. If you take some of the share side ones, then you do have to be a little bit more cautious of that, so you potentially don't get a margin call. I'm practicing those for the next week, the next few weeks, and I'll be ready. Hey, it's very powerful. I had someone in the group. They made like 30 some thousand. Today they made a lot. They made like 20,000. So you make the most. If you lose for a day or two, because then you buy another contract or two. You know what I mean? From whatever you're putting in. So absolutely. Hey, we got any other questions? Yeah, yep. And it's the same exact thing as we all doing. The only difference is they got they just have a larger account. I don't know why I keep having trouble. I couldn't pull up all the legs for the Iron Condor yesterday. Now, you were right. You were right. You should be able to pull them up. Like if you click Iron Condor, it should give you all 4 sides. But yeah. Do you guys have any other questions? Let me know. If not, no worries. 10 o'clock East Coast time tomorrow. We are live trading. If you do want to attend the live trade session tomorrow, let me know. The same Zoom you're on right now, I'll post it in Discord to remind you guys. You guys can hop on. If you're full mastermind, you can trade with me every single day if you'd like. Just let me know. I also have a dedicated area where I do put some of the Iron Condors in the chats on WhatsApp. You guys all see them as well. But yeah, if you need help or you need something planned out per your account size and what I recommend, I'll help put you on the best track to success on the swing trade side. They don't call me Swing King for no reason. I just want us all to have fun and expand our accounts. You know what I'm saying? So can we do condors with SPY with 2,500? Yeah, Nikki, absolutely you can, because you're only leveraging about $100. Yeah, yep. So I wanted to do a small account challenge. I'm going to where we're going to do some of the iron condors on some of the shares, and we're going to do some legged ones. It's all the same, and it's for people that got like $1,000 to $2,000. And I'm going to show you that you can grow it 10, 20, 30% with consistency following the plan, using the same tools over and over and over again. Yeah, see the one-legged ones, it's like a spread basically where you may you risk $30 to make $400 or $450, but the probability to win them is a lot less. But I mean, you only need to win 1 or 2 a week to be heck of green. You know what I'm saying? Now we're gonna do another masterclass on that one. That's another day. We won't open that can of worms right now. But yeah, so we're gonna rock and roll. You know, me and Mike, we've been talking. We were going to do it last week. Then we had the news, like the crazy news, and then I was going to do it this week, but then I was hesitant with the election, and good thing we did because the markets would have smacked us. But we were in the strangles, and we all made good money. But also on Tuesday, I'm going to show you guys the alerts that are getting hooked up. It's Swing King alerts, and that you can trade directional with $100 to $200 per trade. The win rate on that's 88 to 92%. You can actually leverage trade crypto. You can trade stock options. We're going to webhook it into the Discord, but you guys can be able to play with it on yourself as well. And that takes swing trading to the next level. So I'm pretty hyped about that. I am really hyped about that one. But we all going to have fun. You know what I mean? So in the end, I know a lot of people have been leaving me on the day trading side because they love the simplicity of the swing trades, and that's fine. You know, that's fine. I love them both, so I'll keep rocking and rolling. Keep me in the loop for that one. Sign me up. Now you guys are good. I got you. You know what I mean? I got you. So, all right. Well, hey, like I said, if you have any friends or family that want to come in and see what we do, just let me know. I'll put them in here. I'll let them attend a couple classes, and we'll get them on a path to generational wealth as well. You know, anything to look out for the Trump honeymoon. I'll take a look. I'll keep my out. I'm not buying nothing until next week, Andre. So we got a couple days still. I need a reset in a lot of things. Yep. So, all right. Well, hey, I don't want to take too much of your time. I appreciate each and every one of you guys. This is streamed and recorded to the YouTube channel. I'll put this in Facebook. And Tuesday we'll do the Swing King Masterclass. Show you what we about to be eating with, and it's pretty good. We got good things coming, so it's a great time to be in the markets and be the experts we are. So appreciate you guys. Live training tomorrow. Be there. Be square. If you ever have questions, comments, or concerns, never hesitate to reach out. With that being said, you also have a blessed one. Catch me on the next one. Beast mode out.